What's up everyone, super excited to bring you this next video. In this video, I'm going to be telling you about what I think could be my next 10x stock. Now this is a stock I already own, and I know I've had a lot of stocks do pretty well over the past year or so, but this stock has been my best performer by far, and I do think it still has a ton more room to run. And so if we go through my stocks that I've had good returns on, it's not Banco ZK, which I have an almost 70% return on. It's not even Cumulus Media, which has been great for me. I'm up over 320% on that stock. Instead, it is a little company with a ticker AMR, Alpha Metallurgical Resources. Now, if you don't recognize the name, that's because the company recently went through a name change. When I invested last year, the company was CTRA Energy, and this stock I'm currently up over 507%. So what I'm going to do now is talk about why this has happened, why the stock has gone up so much, and why I think this could end up being a 10x on my initial investment for this stock. Now, before we get started, be sure to hit the like button. It really helps my channel a ton, and I appreciate all the support from you guys. So now if we take a quick look at the chart of this stock, it is in a very clear uptrend. From when I bought at just around $4, we are now sitting at over $25 for this stock. And so obviously one of the main movers of this stock is going to be what the price of coal is. So now let's get to the first reason why the stock is doing so well, and that is that commodity prices and coal specifically have been on a massive bull run over the past year. Coal futures are now over $120 a ton, and this is the highest level in 10 years. When I first invested in this stock, coal futures were around $47 a ton, and if you go back to my old videos when I was talking about this stock, I said I was expecting coal prices to increase rapidly, and I thought they could be over $80 to $100 a ton, and we have far surpassed that now. So if you just take a look at this chart, we are at the highest prices since 2011 for coal. And now the reason for this coal rising is mainly due to supply constraints and higher demand, mainly from overseas. Here's an article from the Wall Street Journal: coal prices hit decade high despite efforts to wean the world off carbon. Now there's a couple of reasons for this major increase in the rise of. The first one is obviously supply constraints. So last year we had you had all the coal mines shut down, and so now everything's opening back up. Everyone has a demand for coal, especially third world countries, and so because of that, the demand for coal is going through the roof, while the supply is still very limited. That's naturally going to drive the prices up. And the second thing obviously is inflation. Inflation has been running hot this year, and there is a lot of debate about whether it's here to stay or if it's going to taper off in the coming months. It is my opinion that it is more likely than not that inflation is going to stay at relatively high levels, and so that's going to benefit all commodities, including coal. And another major reason for the supply constraint in coal is that a lot of coal companies have run to try to shut down their coal mines. They're having pressure from governments, pressure from investors that they need to be more green in what their business is. And so because of that, a lot of these coal companies are running to shut down their mine, and all that's doing is cutting off the supply. So whatever companies do end up remaining with the coal supply are going to have a huge advantage when the coal price just goes shooting up. And here's a quote from a commodities trader saying, "Everyone turned their back on these coal assets. Those companies that have hung on have made a small fortune just in the past few months." Now, the second reason why I think there's going to be a huge demand for coal in the coming decade is all of the infrastructure spending that's been going on. So it's been all over the news. President Biden just signed a $6 trillion infrastructure spending bill, and this is going to have a huge impact on coal demand, especially for companies like AMR. So now there's two different types of coal. There's thermal coal and metallurgical coal, also called met coal. This company, AMR, has been increasingly divesting from the thermal coal business and is soon going to be a pure play met coal business. And even though thermal coal use will continue to decline, met coal is definitely here to stay. It is one of the main commodities used in steel. And so obviously when you're about to spend $6 trillion on infrastructure, you're going to need a lot of steel to get everything built. Now you can take a look at the slide from this company, Pathway to a Pure Met Portfolio, and they have a nice little graph that shows what percentage of coal shipments are going to be from met coal. And so this gives estimates a few years out, and by 2023, the company is expected to be shipping 93% met coal. This is almost a complete reversal from 2016, just 4 or 5 years ago, where thermal coal made up 86% of the shipments for the company. And so focusing in on met coal is going to yield an improved ESG profile and lower capital expenditures. Obviously, ESG investing is the rage right now. And so if you have all of those funds and all of those investors jump onto this met coal investment, that is also a huge tailwind for the company. Now, another recent development for the company is they've recently completed low-cost mine development projects. These are new mines that they've been opening up that allow them to mine coal at incredibly efficient prices, where the direct mining refining costs are now expected to be below $70 per ton. Remember, coal futures are currently at $125 a ton. So if these coal prices stay elevated like this, these mines are basically going to be printing cash for this company. Now, AMR is also the largest and most diverse met coal producer in America. You can take a look at this chart. They produce over 12 million tons of met coal a year, which is way larger than the closest competitor. They also have a good quality mix and a good balance between exports and domestic use. Now, one of the things I'm most excited about for this company is the cost reductions they've done in the past year. They've streamlined their processes and they've reduced the price of mining their coal. And so just from 2019, they've reduced the cost of met coal by around $20 per ton. This is huge because that cost reduction is going straight down to the bottom line and is going to show up directly as net income for the company. They've also gotten their capex spend under control. So over the past couple of years, they've had elevated capital expenditures, opening up new mines, but now their estimate in 2021 is just 85 million, and this is expected to be a consistent amount needed for capital expenditures. Now again, I think a huge tailwind for this company over the next coming years is going to be the steel demand in 2021 and beyond. If you look at the global steel demand, it is just growing year by year. Expected 2021 a 6% increase, another 3% increase in 2022. And if you just look at India, India is going to have a huge demand for coal as they become a wealthier nation. So if you just look at this chart for estimated demand for coal from India, and that is a major partner of AMR. 26% of the company's exports go to India. So that's going to be a huge driver for growth for this company. And so the craziest part about this company is that even though I'm up over 500% on the position, it still looks pretty cheap, especially if you consider what the estimates are going to be over the next few years. So here's a chart showing market cap to free cash flow. Right now the company is trading at under 9 times free cash flow. Whenever I invest in the company, I like to look for a company that's trading for under 10 times free cash flow. And AMR still fits that criteria even after being up 500%. And you have to remember this is based on the past 12 months of free cash flow. I think the free cash flow over the next 12 months is going to be much higher than it was over the past 12 months as the company starts to realize profits from this huge jump in coal prices. So now if we talk about where my price predictions are for the stock, obviously there's a lot of variables. Price of coal being the biggest one. That's why this was more of a speculative investment for me. I was a small position when I took it, but I do think as long as coal prices remain anywhere around the levels they are now, they can even fall a bit. Even if coal prices fall, as long as they stay above historical levels, as long as this company keeps executing, they have a good management team, as long as they keep increasing efficiency, cutting costs, paying down debt with their profits, I think this stock could double again from here. In my original video, I said $60, $70 would be a best case scenario. And so I do still think that's possible. I think doubling here again, which would put this stock at $50, I think that is becoming more and more likely as the conditions for met coal just keep improving. Obviously, remember, this is not financial advice. I'm not a financial advisor. These are just my own ideas. So be sure to do your own research before you buy anything that I mention in my videos. All right, so that's it. Let me know down in the comments if you have thoughts on this company. How high do you think this stock could go? Comment down below. So that's it for now, and I'll see you all on the next video.